Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Dan Ahrens, Chief Operating Officer and Portfolio Manager of AdvisorShares, to discuss active management in highly thematic spaces. Dan, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me on, Jill.
And Dan, AdvisorShares has seen success with certain themed funds, but your funds are all actively managed. Why do you think that's important?
Well, if you're working on a theme, and themes have been very popular funds and ETFs in the last year or two, if it's a narrow theme, a very limited universe of stocks, we believe active stock selection is extremely important. With a narrow universe of stocks, sometimes a market cap weighted index, in our opinion, is the very wrong way to invest. Some of the biggest stocks in a certain industry or category may be some of the worst performers. We think we have an excellent track record for selecting which stocks to own, which stocks to overweight, which stocks to underweight, and we think our track record proves that.
Your cannabis fund, YOLO, was the world's first actively managed cannabis fund. It's performed very well. Why do you think that is? Tell us more about that.
Well, cannabis is just a great example of what happens in a narrow theme. There's actually one biggest cannabis fund that is an index, and some of the largest cannabis companies, especially Canadian cannabis companies, had been some of the worst performers out there. We select more towards the US side of the border in cannabis, and we have certain cannabis companies, even some big famous ones, that we've avoided completely, and others that we choose to, as I said, overweight and underweight, and our track record proved it. In 2021, our YOLO fund was up more than 40%. The largest cannabis index was negative. The difference in performance in the same industry was more than 50% in 2021. Also, our since inception and 1 year track record proved the same thing. Big difference in performance in the same category.
What are its top holdings?
Well, in our fund, YOLO, the largest holding is a company called Village Farms International. They are famous cannabis growers and greenhouse growers in all over North America. In the United States, they grow peppers and cucumbers and tomatoes, and they use their expertise in greenhouses to have a very successful greenhouse in British Columbia, Canada. They're one of the smaller names, though, that are a little bit off the radar. We also own the big Canadian LPs, Canopy Growth and Tilray, but we honestly avoid most others. Right behind those, we invest in a number of the US multi-state operators. Green Thumb Industries, Curaleaf, Trulieve, we're big believers in those.
So you think these are the best opportunities in cannabis right now?
Certainly. There's some other big names out there that happen to be on the news all the time, like Aurora Cannabis and Hexo and Sundial. We don't own those. They may have gone up quite a bit in the last 6 months. We think it's largely going up on false narrative, false information, almost the same reason that GameStop and AMC have gone up, but it can't last. And the real opportunities are on the US side of the border, and that's where we want to put more of our focus.
You just launched 2 new funds focused on areas that may bounce back strongly from COVID. Tell us about BEDZ and EATZ, Beds and Eats.
Sure, Beds and Eats. One, Beds is the AdvisorShares hotel ETF. It's not just hotels, it holds Airbnb. It holds some of the cruise lines, but it's quite obviously a play on the COVID bounce back. But even after that bounce back, we're very big believers that people worldwide are going to continue to be more global. They're going to travel more and more. It's not going to fall off unless there's something like a pandemic, but we see that these hotels have survived that very well. And it's a bounce back play, but also a long-term play. We're rather surprised that a unique ETF just focused on that piece of the industry didn't exist previously. So this is where people can get that exposure. We have a very similar thing in EATZ, EATZ with a Z, the AdvisorShares restaurant ETF. It's not just restaurants, it's also DoorDash, Grubhub. And right now we're a little bit more focused on fast food and fast casual. We think that's in the COVID bounce back, sort of the sweet spot, but it invests in fine dining in all areas of the restaurant industry. On our BEDS ETF, to bounce back to that, BEDS with a Z, we're currently focused a little bit more on leisure travel. That is picking up much faster. Business travel is going to it's going to be a little bit further behind, but it's going to come. But that's why it's, again, very important to be actively managed. We're not trading every day. We're not overly active, but we're selecting which sectors, which areas, such as leisure versus business, to focus on in the present.
All right, Dan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.